Good evening, this is Ryan Mallory for Shareplanner.com. Today is December 17th, 2010. Only a week away from Christmas Eve, so you guys better get your shopping done. Only about 2 more weeks before we wrap up this entire year, so uh, start padding those profits as much as you can because there's not too much left of this year. Um, Overall, it's been a pretty solid month for me personally, but to be completely honest though, I'm a little bit uh, guarded in regards to this market because I do feel that there is always the chance that this market could just completely turn on a dime. Um, with the high unemployment, the crisis in Europe that's still going on, the potential for uh, deflation, inflation, whatever you want to say. There's a lot of things at play here. Probably more so that we have in other years, and coming right off of 2008, and there's the possibility that the market could always take a turn south. Now, I'm still trading, long and hard, and I'm not looking at taking too many short positions. Though I do have one in DirecTV right now that's been pretty kind of generous to me over the past month or so. But uh, I just put that out there because I don't want people to get too euphoric about this. Uh, the market. Yes, we're on a really good rally here since the September 1st lows, and I think it'll continue to go upward in the near future. And usually, that's all I really try to forecast is the near future, or how I feel the markets are doing from a health standpoint. And people try to go way out to 2015, and we're going to rally on this day in 2017. And I just think that's all a bunch of hogwash. And they say that stuff because no one's ever going to remember them saying it in 2017, whether they were right or wrong. So they'll make all these grand and glorious predictions, or doom and gloom predictions, and there's no reason for them not to, because they can profit off it in the short term and not be held for it accountable for those comments in the long term. But yeah, just what I want to tell people is just to constantly keep keep one eye open, at least as to the potential downfalls in this market, to always have a game plan in place for what could happen. If you do that, I think you'll be fine. I mean, that doesn't mean that you can't trade or buy stocks in the near term, and just keep making money off of the stocks to the long side, or that you have to be shorting stocks. And I'm not saying that. I'm just saying that as you're buying these stocks and you're setting your stop losses and you're taking profits off the table, just be consistently cognizant of uh, warning signs that there may be something around the corner. I think if you do that, I think uh, you'll be all right. All right, so with that being said, I think the market's really good. I think if I was if I had to put money on it right now, and I guess I essentially am, since I've got long positions open, I do think that we rally into the end of the year. I think that the market's set up to do so. For now, though, we need to break above these highs right here. If you look at the 1246 level, that seems to be where the market is getting hung up on here. Basically, 3 out of the last 5 days we've been hitting that 1246 level without much success. We're consolidating nicely at the highs, which I think is good. But once we can break above that 1246, I think we'll see another advancement into the 1260s, maybe into the 1270s. But there is some resistance in the 1260s. So um, once we break out, there's probably another 2-3% rally opportunity for these markets to advance, and good chance that we see that at the end of this year. Um, Looking at it from a 5-minute chart, um, yesterday we broke out of this descending or this downward channel that had been forming over the past 3 days. We broke above it, and since then, I mean, it's moving up very nicely. You have a little bit of a trend here going. I guess that would probably be it right there. So overall, on the intraday charts, you look at it from the 30 minutes. Everything seems to be pretty good. You got a little bit of of a double top possibly here forming, but it's not legit until you break below these lows from the 15th. So, but yeah, daily charts look good. Weekly charts look very good. We had talked about before this 200-week moving average being very critical. Um, and when we do break above that 200-week moving average, we do see a pretty large advancement in the past. For instance, right here, and then we see a big climb when we broke down below it, and again here. So that 200-week moving average is pretty significant. We broke above it, and it looks like we're off to the races from that perspective. Uh, let's look at the monthly charts here just to take a quick snapshot of that there. Once again, pretty good ground there to say the least. Good trend line going back to the March lows. So, few stocks I want you guys to keep an eye on going into next week. Garmin. Here you can see the 200-week or 200-day moving average acting as a little bit of resistance overhead, but once it can clear that hurdle at around 32.01, it should do pretty good, especially if it just closes above it. Looks like it was affected pretty big by the options expiration. Just take a look at that huge level of volume that poured into it today. The other ones were MENT. This has been a favorite of mine this year. It's bull flagging. I think it's going to break out. And once it does, I'll put an order in for that. Ford, another one that I really like. Breaks above 1693. You got a cup and handle here at the highs. Best place for a cup and handle to show up at. Once it does that, 1693, I'll be long in that as well. WRC broke out. We have been watching that for a while. Broke out real strong. CERN did the same for us today. That was great. SPGI. I didn't take any profits off of CERN. I kept it going, and once it breaks out, it tends to break out for a few days. So I'm going to play the odds on history there. SPGI, I liked it for most of this week, but I never got into it, and I'm a little bit leery now after the 2 days, now in a row where we failed to, 2 out of the last 3 days where we failed to hold the breakout level. So, with that said, get some rest for this weekend. I know there's going to be a lot of pressures on everybody during this Christmas season, so be cognizant of that when you're trading in the markets, that if you're overly stressed due to the holidays and with Christmas and family coming in, then it might be a good opportunity for you just to take a step back from the market and just relax a little bit. I will probably be trading throughout the end of this year. Not probably, I will. I'll be keeping up with Shareplanner too. The last week in December, you might see a little bit less in terms of articles coming from me, but I will still be very involved on the website. And then January 1st, you have the new year and a clean slate for trading. So whatever mistakes you all made throughout this year, including myself, I've made plenty of them to learn from. I've documented them pretty well on the website. You get a clean slate and you get to apply all those lessons and see if it helps you make more profits in the new year. So that's going to be it for tonight. This was the S&P or the weekly market wrap up. I'll catch you guys next week. So long.